Three reasons copper might work. Part of Trump 2.0 is Musk as his right-hand man, first Bannon in 2016, which is quite a contrast, who historically carries a heightened focus on unprofitable tech, robots, etc. This immediately conjures up big strides in electrification, of which copper is the backbone. These guys are this is the real deal stuff.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. I'm Vince Lanci, and today's morning market rundown is sponsored by Extra Caffeine after yesterday. All right. There's a title page. Today we'll be discussing JP Morgan. JP Morgan has within the company, within the bank, they have a research team. It's a trading team, Alpha Group. And this is not the stuff you're going to see anywhere else publicly, because they don't even send it to other media channels because they wouldn't know what to do with it. Anyway, it's usually equity focused, so I rarely bring it up here. Because that's where most of their money is, in equities, right? But today's report has a nice little Q&A in it, going through Trump and stuff like that. But they have a little section on commodities that I just teased out so we can take a look at it. And the focus there is copper. But there's an interesting insight about Donald Trump and Elon Musk as it relates to 2016. Or parallel, let's put it that way. And then we also have Morgan Stanley has I was looking for more on copper after the JP Morgan thing, and Morgan Stanley has had a report out on China iron ore. So I'm drilling into it, looking for the copper insight, because it'll relate to silver as well, right? And there really wasn't anything in there, but there were a bunch of charts talking about cost of production, real interest rates, and I think they were good for us to look at, considering where we were, where we've come from, and just to take stock of where things are. Anyway, let's start with the markets. The dollar is up 33, surprise, at 105.84. Just a quick aside, why is the dollar so strong, if you're wondering about that? Because everything Trump says he'll do is bullish for the dollar. And that would be tariffs, right? Slows down their economy, makes them have to buy dollars, right? It's primarily tariffs, but there's other things as well, like cutting back on immigration. It's actually bullish for the dollar, and bullish for inflation simultaneously. It's a little bit goofy, but that's the way it works. Anyway, that's what's going on. Everyone is going, oh my goodness, he's really going to do all this stuff. And so China is depressed, the dollar is strong. And, the only thing that's not doing poorly is the stock market. And the US stock market, you would say, oh, well, it should do poorly because, the dollar is strong, and you'd be right. And you probably eventually will be right. But between now and then, the rest of the world's stock markets are getting crushed compared to ours, right? They can't sell anything to us if there's tariffs, so their stocks go down. Dollar gets stronger. It's like classic weaponization of the dollar. I mean, they're not weaponizing it. Well, I mean, actually you are, but you get my point. So that's why the dollar is just driving everything right now. Stocks, global stocks, domestic stocks, gold, silver, copper. This is like an example of dollar dominance, and what policy does to the rest of the world. Okay, moving on. 10-year yields are up 3 basis points at 436. S&P 500 is 599, down a handle. The VIX is 1521, up 24. Gold is 2602, down 17. Was down like almost 25. So a bounce off the sell-off. Let's see. Silver is 30.41, down 26. You can see that those two commodities are now, silver's not really outperforming going lower, at least not yet. So that would be that would be a sign that's literally it's not over. We'll talk about that later. Copper is down almost 9 cents at 414. China, right? This is China, man. WTI up 42, 68.81. Yeah, but it's been hammered for the last week. Natural gas, 268, down 2 cents. Still didn't look into that. Bitcoin down 2,000, 86,800. Had a 10% up day. Just unbelievable. I can't believe that happened. Ethereum, 32.40, down 135. Palladium, 967, down 14. Platinum, 954, down 11. And the gold silver ratio is, slightly higher. It was lower yesterday on a down move. That's why it's very hazardous to use the gold silver ratio as a directional indicator. Uh, and grains are pretty much neutral. Soy is down 7, corn is up 2, wheat is up a half a penny. So soybean is the market we care about today. Okay, so the discussion. Let's start with the home page. No, I had to get a sip. All right. Homepage, trade analysis, gold goes, so might Bitcoin go? That's an explanation for a trade that I actually have on, and not recommending it to you, but giving you a parallel between gold and Bitcoin syncing up in the real world, and also technically looking to be mirroring each other with gold leading. Special Trump will monetize gold's value. I feel strongly about that. But it's based on an article that I read at Grant's, and James Grant is just a great writer, so it kind of inspires you to write. And then the next story there, President Trump on the line for Mr. Powell. T.S. Lombard's Dario Perkins, who's a managing director there and chief economist, basically, talks about the effects, the true or how overstated or understated are the inflationary effects from Trump. And he gets into that with tariffs and immigration. And one of the things he says in there is he actually charts presidential calls to Fed chairs. Actually, pretty interesting, and what we can look forward to probably. All right. JP Morgan answers some commodity questions to what I mentioned before. So JP Morgan's Alpha Group. In their Q&A, again, there was some commodity stuff in there, so I wanted to break out a little bit of it here, and we'll give you the rest of it at the bottom. One of the questions that they answered directly, they don't mess around, they answer these questions. What commodity equities can we buy? So if you're in the same camp as Paul Tudor Jones or Stanley Druckenmiller, that all roads lead to inflation, particularly a red sweep, then yields can go only one way. The hedges are the obvious: gold, Bitcoin, financials, cyclicals, but also according to Tudor Jones himself, commodities which are incredibly on their own. Which ones? They go through oil and they talk about why it isn't. Remember, they're talking from an equity point of view, right? Companies. They talk about the commodity itself, but their bigger potential was in copper. So let's read a little excerpt from that. 3 reasons copper might work. Part of Trump 2.0 is Musk as his right-hand man. First Bannon in 2016, which is quite a contrast, who historically carries a heightened focus on unprofitable tech, robots, etc. This immediately conjures up big strides in electrification, of which copper is the backbone. These guys are this is the real deal stuff. Unprofitable tech, meaning the money will be spent on it, whether it's profitable or not. So that's a reason to own copper. Quick comment about this. Who was Trump's right-hand man in 2016? It was Bannon. Ideologically, it was Bannon, right? Social culture wars, stuff like that. Now he's going with Musk, and even though Musk is a businessman, it's still culture wars. And I wouldn't call it culture wars, but I would say it's basically free speech. That's not a culture war, but Musk has the pulse, and Trump sees the pulse and he goes with it. So do not underestimate. Musk is Bannon. Musk is Bannon. Bannon had heavy influence over Musk. over Trump. And Musk is in the same position, a person that he trusts, who he agrees with ideologically. And Musk is an expert. All right, so that immediately conjures up big strides in electrification, of which copper is the backbone. And for me, I'm silver based. Silver, right? All right. Second reason, the only China response to a red sweep could be the stimulus they've left in the bank, in the tank. Meaning, uh, the Fed, Trump wins, strong for the dollar, higher probability of tariffs. That hurts China. So they have to stimulate again. That's what this is saying here. Now, fair enough. It's a game theory concept. We think they're going to do it because, but maybe they're screwing up. I don't know. But that's the point is you buy copper if you think China is going to stimulate. You buy silver. Number three, generalists have to own something in materials, energy, and copper is much more thematically compelling than hydrocarbons. So what they're saying is, you hear me talk about asset allocations. Asset allocators have to put something in commodities. And now you're looking at oil and you're saying, you're looking at copper, you're going, yeah. See, the difference between Trump now and Trump 2016 is he's bullish. He's bullish oil. He's bullish fossil fuels, but he's bearish the price of oil because he's going to drill for more. Why is 2024 potentially bigger than 2016? Well, this is where they pivot away from commodities to banks, but I left it in here to give you an idea of the thought process. Deregulation may put banks on the best footing they have seen in nearly 2 decades, pre-GFC, with M&A on the come. This sends valuations higher, notably risks abound. Okay, so what are they saying there? Why I couldn't figure out why banks rallied. I said, why are banks rallying? He's not a finance guy because he's going to deregulate the banks. And that's going to allow JP Morgan and the bigger banks to slurp up the ones that they want. So the regional banks are going to get bid up in anticipation of M&A on the come. How high is too high for yields? Great question. At what point do very high yields that are driving outperformance in stocks begin to impinge upon the stocks? Well, they go into an explanation. I want to give you a little bottom line analysis here. They think 4.45 with above trend growth isn't sufficient to warrant palpable fears. I mean, so as long as GDP is growing, rates can go as high as 4.45 and no one will care, right? Now, so 5.25 might be, or something in that realm. So look at it this way. Between 4.45 and 5.0, as long as companies still have profit margins that are good, then it's not a problem. 5.25 and people start to worry. So that's kind of a new high, right? What are our three favorite longs? I'm not going to list those here, but 2 of the 3 are financial companies. You get the idea, the whole bank consolidation. Why are semis up in a red sweep? Interesting, but not our topic here right now. All right, so moving on to the Morgan Stanley chart thing. So here I am, I'm looking for iron ore, and I stumble upon this, right? Spot commodity prices versus the marginal cost of production. This is something very discussed in the equity world and for miners. So I'm putting it out here for you. So aluminum, how high is the commodity versus its production? So aluminum is up 109% relative to cost of production. Gold is up 104%. Again, this is their metric, right? Bauxite 71, copper 69, thermal coal 53, zinc 51, lead 42, iron ore 37, aluminum up 23, I'm sorry, hard coking coal 18, and nickel down 14. Okay, so there are people out there that have a better handle on what the real cost is than I do. I'm just going to say that I still look at these because I look at them for relative value. It's like, oh, there's gold. Where's copper? Where's silver? It's not on there, right? So I'm sure silver is lower. They don't dare put it out there. But give you an idea, there's a lot of charts like this in there. Here's another one. It's a little bit smaller. Let me see if I can make it bigger for you. When you look at this chart, I've been a person talking about real rates, interest rates, and dollars and ignoring it. When you look at this chart, it kind of says, well, in the really, 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 really big picture, gold's overvalued relative to rates. Now, I'm not trying to freak you out. But the dark blue or the blue, that's real rates that are positive. Real rates that are positive are, bearish for non-interest bearing assets. So there's gold. Obviously, it's a scale thing, right? And then when real rates go negative, uh, gold starts to rally here, right? Real negative here. So it, just kind of look at this. Real rates get really negative after COVID, and gold takes off. And now you've got BRICS buying, you've got central banks buying for the reasons that have nothing to do with real rates. They want the gold, right? And now you see gold's way up here, and real rates are positive. So the question I'm asking myself is, if real rates remain positive, this market is going to go down. Now, how much slower? Not a lot, because this is what the reset is. The reset is gold is going to be based at a higher level. Okay. These days are gone. Okay. So I expect gold to drop if real rates stay positive. Um, but not, not, we're nowhere, those days are over, knock on wood, right? But, the next question is, will real rates stay positive? And part of me says they won't, because Powell wants to lower rates and get them negative as quickly as possible, because as a debtor nation, positive real rates crushes our economy. Uh, our debt that we have to pay back is real. We want to pay back cheap and debased money. So I'm trying to figure out how that works. And maybe it works with bond yield just screaming higher, and that bond yield going higher actually eats into the interest rate. Anyway, who knows? But it's on my radar, right? As they say. Moving on, news analysis, RBC BOA on gold post-election. That was the one we had yesterday. Thought it was very interesting. I thought the RBC one was very frank, without being too salesy. And BOA saying that CTAs are too long. Trade analysis, we mentioned that. President Trump on the line for you, Mr. Powell. Robo Trump 2.0 means Fed pause on cuts likely. I'm hoping this is true. Basically, if you look at Trump's tariffs, and if he does everything he wants to do, the Powell's going to be like, you know, if it's as inflationary as everyone thinks, right? If it's as inflationary as everyone thinks, setting immigrants back makes wages go up. Tariffs is inflationary. How inflationary is up for debate, but it is inflationary. But if he does all those things, then maybe Powell says, I'm not going to cut. When you look at the markets, you look at what Bitcoin is doing, you look at what stocks are doing, this is like 2020. Things are just like making new all-time highs, and he's cutting rates, right? I mean, that's what happened in 2020, 2021. So Bitcoin, you could look at it as I frequently talk about it in many ways. One is, it's tracking gold, but it's also tracking stocks. It's also basically a tech stock. It's a risk-on version. It's a risk-on gold. I want safety, but I want it to go up. It's very greedy. It appeals to greed. I want it all. Market news. Nothing that I thought was very standing out, but there you have it. Data on deck, CPI, PPI this week. Today is NFIB optimism. I think the market usually cares about that. But if the market reacts to that, it's reacting to what it thinks it'll do to unemployment. NFIB is an indicator of unemployment. If small businessmen aren't optimistic, they're not going to hire. And small businesses, independent businesses, are the engine of job growth in this country. Period. End of story. And there's the premium. There's a bunch more charts. Let's take a quick look at the market. Oh, I know I want to show you. Let's talk about short term versus long term, or intermediate term versus long term. Here's me replicating Michael Oliver's, long-term trend. Boom, right? There you go. And people will look at that as support and resistance. And you might look at it that way, and that's not a bad thing to look at. But just know that this is the long-term trend for gold. Up, up, and away. Just not up, up, and away tomorrow. All right? Try and keep that in mind as I put the next chart up. Here I am just kind of cuffing that chart I just showed you. And within it, I put those white lines that I put before. And those white lines are changes in speed within the trend. Okay? Why am I showing you this? Because this is the essence of the market. We're in the trend. Okay? We're in the trend. And now, September of 23, there's an uptick. March, uptick in speed. See, each line is connected, connect, 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 right? It's like a little bit like, remember that video game Tempest? Whatever, I do. And then we get all the way up here, and now you're like in the stratosphere in terms of speed. It's got to calm down, right? It's got to calm down. So I'm saying this line is broken. We don't need it anymore, right? It's a trend line, but it's not how I look at it, right? This line is about to break. Okay, you want to buy it because of support there? Not a bad idea if you're trading it. But I'm saying I don't care if it breaks. I think the market's going to go back to this trend here. So if it goes down here, I'm going to mortgage the house and buy some. And if it goes here, I'm probably going to buy some as a trade. I should be short right now, but I'm not. I don't think it goes back down here to his level because I think this is the new trend. And I think this is the trend getting a little bit ahead of itself. And this is the trend really getting ahead of itself. And this is everyone going, oh no, Trump's going to win. It's going to be the end of the world. So there you go. That's the chart I want to show you. And just to throw silver up there, remember, we talked about this yesterday, right? We broke right through it. I think the market needs to go between $29.50 and $30. I think it needs to. It does not mean it's going to. We could have a news item tomorrow that changes everything. China stimulates, bets are off. And, they could do that. All right. Dollar up 30, gold down 14, silver down 17, WTI at 46. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.